Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look at the Bitcoin market. So here are some thoughts that maybe could be useful for those of you who are planning to trade in the nearest time on the Bitcoin. And last week we actually discussed the possible pullback down from the top, because some technical reasons exist here that market should stop the rally for some time, take the temporal pause in upward direction. As you know, in general, the overall rally stands due to the, at least in the last stage here, it's an improvement of the Bitcoin ETFs in the United States. That's a great step in direction of popularity of the cryptocurrencies and spreading among the public investors. So this is really big support to the market. And this overall effect, as you could see, was really positive here, which means that sentiment in the long-term chart stands valid, and actually all things that we could say currently mostly stands in relation to some technical, tactical fluctuations on the lower time frame, while on the high time frame we have currently no doubts that upward action should continue once the retracement will be over. So meantime, here's market is showing the proper reaction first on the target that we have on the monthly chart. This is the minimum target of the volatility breakout pattern that we previously discussed, and it's actually has been completed. This market hits the all-time COP target, which is a 618 extension of this ABC bottom pattern. So this is the first reason for reaction. Second reason was on the weekly chart, and actually is on the weekly chart. This is weekly overbought. This market has hit here and shows the proper pullback, which is also absolutely logical, and that's also we discussed in the previous video on Thursday. As a result of this pullback, what we have? Low was around 59.50, and as we suggested, and as you will see on the daily chart, I remind you that this is the upper border of the consolidation of the strong support area that we have set is potentially interesting to consider taking the long position here. As a result, here we've got this shooting star pattern that theoretically suggests that retracement might be deeper. So our task here is to set some patterns and rules that potentially market could form, and to know them in advance, that could help us to easily understand whether this deep retracement happens or not, and what the signs of this deep retracement and the signs of the continuation. Because here we could get as straightforward upward continuation, taken out of the stop erasing of the pattern, as deeper downward action. So market, for instance, could form here as the evening star, the suggestion a bit deeper retracement, or it could show just a reaction based on this pattern to the downside back to the 52 area. This is also possible. This will not be the breaking of the overall tendency. This will be just common retracement. So for example, if you just take a look at the pullback that you've got here, and let's just move it here, you will see that the 52 is in general the harmonic pattern, is 53 in this case. And retesting of this previous top, and that is not something that breaks the overall context. But since Bitcoin is not really very cheap asset, even minor pullbacks here could cost a lot, and it's definitely worth of our attention. So as we said, on the weekly and on the monthly chart, we have some background for retracement that already actually has made the first step. On the daily chart, we have talked about the possible bread body trade, and we said if market drops to the 57, that might be the good point to take the long position with an upward action. At least this will be relatively safe as the first reaction should be to the upside that led us to move stops to the break-even and protect the position. Currently, we have to say that we haven't got bread and butter, because bread and butter suggests, at least by the chart Napoli, it suggests a fast drop. So within the 3 sessions, right to the major support area of the thrust. Here we see that 4th session in a row, market stands tight above the minimum support area based on the thrust and shows no downside action. It means that alternative way how market could progress here is to form the double repo sell. Double repo, it's it's two-edged sword. It's because first it suggests deep retracement, which means that it might be not even to the 57 but 52 area, somewhere to the next support area, and theoretically it could take the shape of the double top pattern on the lower time frame. Second consequence is that the second edge actually of this sword is that double repo could fail. So because by the chart Napoli, the failure of double repo is also the directional pattern. As the proper double repo is a bearish, as the failure, double repo failure in our case will be bullish. From that standpoint, here you need to control what the price shape will be formed here. It means that retracement probably will last for some time, and if we do not see fast downside breakout, you need to keep an eye on whether market will take the shape of the triangle. This is the first pattern that you need to control here. If market starts to take shape of the triangle here, it will be direct sign of the upward continuation. If market will coiling here without any significant drop, although maybe even double repo will stand in place, but market will still going sideways, forming the pennant, this triangle, this is the sign of upward continuation. So that will be the signal to buy. This is the first pattern that we have to control and keep an eye on. All other patterns that we discuss mostly stands with a deep retracement. So first is the double repo. You know what is it and what it is, and market first needs to return back to the previous top. It will be better if market will show the washing rinse of this top, trying to break him up, and then it should follow some strong downside collapse again. So that will be an attempt to failure attempt to break the previous top, and the actually capitulation of the bulls to do this in the short term and drop. In this case, retracement should be significantly deeper, and probably it will be at least to somewhere to the 52-53 area. So retesting of this top is very probable if we will get the double repo sell. This will be deeper pullback. Additionally, we could say that if the double repo will be formed, it will take the shape of the double top. So here it will be some return up, then downside action, and if you will calculate the target of the potential double top in the case of the double repo, this will tell you that this will be somewhere right around, even you can see 51, so even deeper than 52 area. So that's the consequences, possible consequences of the double repo pattern, and as it probably will look like the double top on the intraday charts. What else scenarios we have here? If we consider this upward action as the bearish engulfing pattern, which is actually the shooting star, so here we also could thought about some kind of the hand and shoulder, something on that sort. This might be formed. It has different targets, so first target will be around 55-56 if this pattern will be formed. But anyway, it suggests the deeper target than this minimum retracement with a possible triangle. So this is another type of the bearish pattern that we have. So that's actually what we have currently on the table on the Bitcoin. So when you deal with the retracement, and every time when it just has started, it's difficult to identify what particular pattern could be formed. And here we have to go step by step. So first we will need to identify and keep an eye on the hand and shoulders, because this is the first pattern that might be formed. For that standpoint, we need to control the retracement of this upward action. If market will climb significantly higher and almost return back to the top, it will be somewhere around 65.80, 65 maybe. It's above the both resistance levels that we have here. It definitely will be not the shape of the hand and shoulders. And in this case, we should just ignore this pattern and turn back to the daily chart, watching for a triangle. Once the downward action will start, we need to control the support line. And if market will hold there and start fluctuation around it, this will be signal to buy. If downside breakout will follow, then we need to check whether we have the double repo sell here. If we will have it, then do not buy and wait for a deeper level. So of course we prepare a lot of updates on this as soon as any patterns will be formed, and on Thursday we probably should get some clarity on the shape of the retracement. Finally, definitely it will be some upward continuation of the major tendency if market will just break this top, erase all the potential bearish patterns, just keep going higher. This is also the, let's call it as the ultimate scenario of the continuation. But first we need to deal with the potential retracement patterns that might be formed here.